I hate it when you go get all these spam emails. You've qualified for a loan of 2 crores.
True.
As a business. Click on the button to access, and when you actually click on the button, it takes you to the website to start the loan journey. So we're never really qualified. It's click and bait, right?
Exactly.
They're making you click to start a journey, which is poor customer acquisition strategy. But hey, it works.
Yeah.
We want to kind of get to where we are already in the UK, and so when you actually click, you get the money.
Makes sense.
Right. So that's when we started saying we will make this happen 10 years ago, people thought we were nuts. On the SME side in the UK, we did it. I think even right now, when we share it with a lot of people, they go, "You're nuts." India is even more chaos, right? As we have discussed earlier too, right? I mean, chaos is the opportunity. I think India is more value conscious and more result oriented. And when I say result oriented, everybody wants a result. Yes, the level of pay. I always say, right, in India, when you deal with SMEs or you deal with customers, the patience level is negative. Nobody's going to have a more current data set on UK businesses than us, not even a credit bureau.
Hello everyone and welcome to this exciting episode of Fintech Ki Baat Dil Se. We are now in part 2, the Dhandhe Ki Baat, where we are with Mr. Chirag Shah, who's the founder and CEO of Pulse. If you are just logging into this video and you haven't seen the part 1, you should probably see the link of it somewhere here. Just do check it out. Chirag has shared some amazing insights on his journey of building Pulse and building a startup in London and then coming back to India and building here. So amazing experience. Definitely should listen it. We'll wait for you here. So since you're back, Mr. Chirag, thank you so much for doing this. It's been incredible and you have shared some amazing insights. Thank you so much for that.
Good to be on it.
Great. I'm pretty sure the audience is excited to now kind of deep dive into what's essentially happening at Pulse and what you guys are building. So without any further ado, let's understand from you on what exactly does Pulse do and what exactly have you been building?
So Pulse, I mean, at the core, Pulse is a data business. We focus on simplifying data for SMEs.
Got it.
Right. Consumer data globally is very nicely aligned. Right. Individual data, if you want, easily available at a click of a button, and people can use it, which made BNPL happen.
Right.
Business data, irrespective of the country you are in, is a very big challenge.
True.
In terms of accessing the data efficiently, and also in terms of how recent the data is. Like if a business files financials, they're already filing them few months late.
Right.
So the data always tends to be out of date. So Pulse was set up to solve this problem, to homogenize data, to get all the data in a single repository in a very usable form, both historical data and refreshing all the data daily. When Pulse started with a big focus on the UK market.
Okay.
Right. And the background for that is, again, I was in UK for 15 years within the lending space on the SME side, understood the space well, understood the challenges, and understood the whole, every player involved. So clearly could see what product I want to build, which will be really helpful to every player in the ecosystem. So that is what Pulse started doing. It took about 4 years for us to get to a stage where for every business in the UK, there are about 7 million odd businesses. For each business, any piece of publicly available information for the business over the last 15 years, it sits with us.
Got it.
And all of that information for every business gets refreshed daily.
I see.
Okay, so nobody's going to have a more current data set on UK businesses than us, not even a credit bureau.
Hence the name Pulse. I think I get where it comes from, right? You have
the pulse of the
financial
business.
Pulse. Yes.
We got the pulse of the business. Yes. Okay. And that was the first. So we got that. That's the core. And on top of that, now it's simple, right? We build simple solutions for every industry that wants to work with a business. Lending, again, close to me because of my involvement historically. And that was a very easy market for us. We work with accountants, auditors, credit insurers, corporate finance houses, anybody wanting to work with an SME, working with their own customers, but needing data. We are the partner for them.
Makes sense.
We've done this in the UK. We have a lending originating arm focusing on securitizations in UK, which to date has supported businesses with 3.4 billion pounds in funding.
Mm-hmm.
And we are very soon about to launch a lot of our products in the Indian market.
Oh, that sounds exciting. And specifically, when you talk about products like securitization and also the data engines that you spoke about, that allows any industry players or BFSI players or anyone else who wants to work with MSMEs to plug in, get insights on the data, and provide more customized services to these MSMEs. But let's break it down a bit before I get excited and deep dive into some of my favorite topics, that is lending, securitization, and all of that. Uh, where do you exactly sit when it comes to the MSMEs, right? Are you the ERP or a similar layer that kind of tracks all of those things and have that interface, or are you a pipe sitting behind an ERP layer, collecting all the data and creating a pool or a data lake out of it?
Now, we are the former.
Okay.
We are not a pipe. We are a data repository.
Mm-hmm.
SMEs give us access to data.
Mm-hmm.
They consent to share the data with us and for us to use the data.
Mm-hmm.
We use the data for everything we do. At the end of the day, has to benefit the SME if we are using the data. Whether
Right.
it's them looking for loans and us being able to bring participants in there, is whether there are accountants working with them and them wanting more accurate forecasting for the business. We have built tools for that. We have a business insight platform. If you are a business owner on the run, you should be able to
Right.
just log in, and quick summary in the morning should give you everything that's happened with the business the previous day.
Right.
We have our
Makes
core
sense.
solutions on that, and it can be customized by any business to what are the important things they want to look at. And it
Understood.
can be as granular as tracking their suppliers, tracking their customers,
Mm-hmm.
tracking every payment coming in, going out, who has authorized it, tracking
Interesting.
margins in the business. That hey, if new things are happening, is every other smaller parameter on track? The aim
Makes
being,
sense.
a lot of businesses, the way they are run is they end up falling in a ditch, because there are
Mm-hmm.
going to be ditches on the
Right.
road. They end up falling in a ditch, and then it takes a lot of time to get out of the ditch.
True.
What we do is make them aware of the ditch so they can swerve it.
Understood.
Right. And a lot of time, effort, energy is then spent on growing the business rather than firefighting.
Makes
So
sense.
that's where we add value and we contribute to the SMEs. And that's where they share data with us.
Fair enough. So, what essentially I think I probably should rephrase the question as well. While I understood the essence, what I was also trying to ask is, are you the ERP layer, or are you essentially a plugin that sits inside an ERP layer that they kind of work with? So I
Both.
think both.
The way
Okay,
we
so
are
you
built,
have
we
your own
have
ERP as well.
yes. So they can use our platform independently,
Mm-hmm.
or they can use any component they want from our platform and
Oh,
integrate it with their own ERPs and platforms at different
understood.
places.
So, for example, in India, if an MSME is using Zoho or Italy, they can use your plugin and share whatever data they want with you to get all the benefits of the insights and
They
all of
will be
that.
soon. Currently, if you
Okay,
look at UK market, so you have Talians over here. There you have got Zero, who are big, and various
right.
other players like that. And if you look there with some of those partners, we are linked where the data from those ERPs can be pushed into us. But at the
Mm-hmm.
same time, we have got a whole lending system where we've got multiple lenders attached on our securitization structure, offering
Right,
support to SMEs. We have
right.
all the data which flows through us.
Mm-hmm.
And at the same time, they will decision and we will push the loan offers back to them on their existing platforms.
Understood,
So they don't
understood.
need to leave the platform and come to us per se. We partner directly with most of the large platforms as well that the SMEs work with, but they can
Mm-hmm.
independently also integrate us if they
So
want.
it's bringing your services to them rather than asking them to come to you. That makes
Yeah,
more
I mean, we are a
sense.
big proponent of everything has to be embedded, right? It's no use an
Of
SME
course.
going to go out of its way to get something. What we make happen with all the data and all the partner ecosystem we have built is we are
Mm-hmm.
where the SME is. We will
Right.
offer them everything and we will show them everything they can have where they are without leaving their ecosystem or what ecosystem they are in. Because
Understood.
we have a broader ecosystem where everybody is a partner, or well, not everybody yet, but increasingly more and more people are becoming part of the ecosystem.
Understood. Understood. Makes sense. Makes sense. Fair enough. While I think my next question could be a bit of a digression, I am very compelled to ask it because you are in a unique position where you have served MSMEs in UK and now you're going to be serving, and you're already serving MSMEs in India. How do you see? I mean, to put it bluntly, like what are the stark contrasts that you see between both?
So we are still in infancy in India.
Mm-hmm.
So early days for us. But I think in general, I I feel India is even more chaos,
True.
right? As we have discussed earlier too, right? I mean, chaos is the opportunity.
Indeed.
I think India is more value conscious
Mm-hmm.
and more result oriented. And when I say result oriented, everybody wants a result yesterday.
That's
The
true.
level of pay, I always say, right? In India, when you deal with SMEs or you deal with customers, the patience level is negative.
Right.
Right? Everything you're working on a basis of yesterday. And that requires you to, I mean, at the end of the day, when you're building an ecosystem, to deliver that level, it
Mm-hmm.
requires every partner in the ecosystem to do it.
True.
And
That's
that
true.
is where we are looking at India and what we are building. Those are the challenges which we encounter and we are trying to solve. So
Mm-hmm.
it's not so much on the end customer or business side. I think from there, I think the challenge is very clear. That's why you have 10-minute deliveries in India, right? Everybody wants something instantly.
Makes
So that
sense.
demand is very clear. But for every partner to deliver that, every partner needs to deliver that. I
Right.
think there is a long way to go in there. And it is that education piece for everyone that people need to work towards. So if you ask me, the biggest challenge we see and the biggest difference is
Mm-hmm.
just the level of expectation and the capability of every partner to deliver that.
Makes sense. Makes sense. So I think that kind of brings a lot to the picture and kind of draws a bigger picture for me. What I also want to ask you is, lending being one and the major service, right, that can integrate directly on top of such a platform. What other pieces do you see kind of plugging in? I personally feel super excited about the possibilities of business insurance being able to plug into this kind of a platform, because the penetration of insurance right now, specifically in MSMEs, in terms of either be it warehouse, be it goods, or be it even the personal insurance for that person who's going, or probably the sole breadwinner for that specific family, that is almost abysmally low compared to other developed countries, right? And this kind of platform can actually serve it. So how do you look at that?
Absolutely. So, I mean, a big part for us in the UK,
Mm-hmm.
big focus for us is the next big segment we are tackling. Insurance, but insurance, business insurance in UK is
Mm-hmm.
more prevalent.
Right.
People are already more aware both on the value of the insurance and the need for the insurance.
Mm-hmm.
I think when we have more conversations here, I think from a personal insurance perspective, people are very aware.
Yes,
But from a business insurance perspective, there is a big understanding gap.
that's true.
And frankly, there is also an offering gap.
Mm-hmm.
Right? Many of the solutions are not fit for purpose. I mean, you can't have a kirana store around the corner treated the same way as a big wholesaler
Of course.
5 kilometers down the road, right? So
Right.
you can't treat them the same. And I don't think that level of work is that level of products are available. So it's not just it's both an understanding gap, but there is an understanding gap because the right products I don't think are available still. So I think that
Makes
is,
sense.
yes, you are right, because that is, if you again, from a business perspective, they are in a platform. If they
Mm-hmm.
can get loans, they should be able to get insurance. They should be able to manage insurance effectively.
Exactly.
Businesses share data with us. We know how much they are paying in their insurance premiums. We should be able to help them lower them.
True.
Right? We should be able to give them options. Say, guys, similar kind of insurance, these are the terms. Is this something you are open to? If you are, click a button, it's done.
Exactly.
That's really the end result which we are all aiming for. But I think if I compare the two markets, there is both a gap in awareness and there is just a gap in viable products.
Fair point. Fair point. No, I think that makes a lot of sense. And I think that also probably again could be a chicken and egg problem, but maybe lack of demand caused lack of product
Yes,
innovation, and again lack of product innovation or lack of product market fit because of lack of variation caused lack of demand, and awareness playing one of the major
it
factors.
is that
Right?
that is the reason it's not there. I mean, the market size big enough for someone to explore? Yes.
Mm-hmm.
Is it going to take a while to penetrate? Yes. So that it is a difficult one to get over the line.
Thank you so much for sharing. I think insurance really kind of also is a value add, but as you said, right, the market in India right now needs to mature and kind of uh, come up to the pace wherein custom built, not even custom built, but actually, a decent innovation is done in the product for business insurance so that smaller MSMEs and across different MSMEs, various innovation, different kind of products are available. Having said that, what outside insurance and lending, while we discuss that, what other products do you see could essentially benefit from these kind of platforms that are as of now not been offered to MSMEs because of lack of information can now be made available?
So if you, so I can compare the two markets and quickly tell you what all things you are working on already in UK and what, and many of them are transferable, right? Today, I mean, if you look at UK, from business savings to the bank accounts that the business open, we can do all of that at a click of a button.
Got it.
Very simple process. The journeys are clearly outlined. If you have got neobanks, right? New banks coming up all the time.
Right.
You have got the new banks really fighting for market share, offering good value to SMEs compared to the traditional players.
True.
Both in terms of inside platforms and stuff as a part of the normal package, plus more in terms of the FX benefits, interest rates being a bit higher. So all those switch and saves and everything are very easily doable. And again, they don't need to leave the system to do it.
Right.
It can all be kind of triggered from their system, which makes the process simpler, right? So that's where we see real value. And it's a real, and I'll say from both sides, it's also from a unit economics perspective, it's a great business for us.
Of course.
Great benefit for the business, where the business is paying nothing for it. The cost of acquisition for banks is significantly higher, especially for businesses which are profitable. Right, in UK. So for us, it's a great market to be in because we are bridging the gap, making it super simple for business at no cost, no expense to them, but at the same time, reducing the cost of acquisition for the banks significantly. So we are solving for a friction there, which is what our focus always is. So again, something which we see can be meaningful here. We also see so one of the things which we are developing right now is how do you link suppliers with business? I mean, you have a lot of platforms doing it independently anyhow, right? But with the amount of data we have in UK, we are building a platform where we can kind of rank all the suppliers based on the information we are seeing from the data shared by the businesses in terms of what are their payment. It's not just goods, right? It's about what are their payment terms. How many, if there are customers, how many times they are raising credit notes. Right. And so all of those things kind of matter. So just that kind of insight for the business. It again boils down to how you manage a cash flow. Right. So we are able to do that. As I said, infinite options, everything that a business needs, we should be able to support them over a period of time.
Understood. Perfect. No, I think this is brilliant. What essentially are you looking at in terms of India game plan, since now we have been building here and I think you're about to hit the market with a few new products? What exactly are you planning? How do you
So I mean, at the core is we are building the similar tech platform as what we have with Pulse for UK. Our core architecture stays the same. How we access data, what data we can access. Of course, the whole data protection regime is very different, both from data sharing, data storing, data usage perspective for us. Right. So that will limit some of the solutions we can provide. That will change some of the solutions or the way we provide those solutions and the way the user journeys are completed. So that is a big piece for us. And also we are working on the lending piece. Right. The aim again being, I hate it when you go get all these spam emails, you're qualified for a loan of 2 crores. True. As a business, click on the button to access. And when you actually click on the button, it takes you to the website to start the loan journey. So we're never really qualified. It's click and bait, right? Exactly. They're making you click to start a journey, which is poor customer acquisition strategy, but hey, it works. Yeah. We want to kind of get to where we are already in the UK, and so when you actually click, you get the money. Makes sense. Right. So that's when we started saying we will make this happen 10 years ago, people thought we were nuts. On the SME side in the UK, we did it. I think even right now when we share it with a lot of people, they go, "You're nuts." I get it. I get where they come from. But see, the challenge that everyone is talking about is data underwriting. The biggest challenge is also people willing to take that risk.
True.
Right? And can you have alternative capital in a form that understands that risk, is willing to take that risk, right, on alternative data, which can make this achievable? And I think that's where we will bring real value to the market. You said we have done to date about 3.4 billion pounds of securitizations. We have great relationship with the global market. And our effort over the last 8 to 12 months have been structuring the right way to bring that capital to the Indian SMEs.
Makes sense.
Okay, so that's where we'll deliver real value.
Makes sense. You spoke a bit about securitization in UK and the products that you have built around it. Could you quickly kind of touch base on that, and then would love to hear on how do you plan to, or whether you plan to do it on India, or whether you see it being feasible, to make that happen in India.
So, I mean, securitization per se is not a product. Securitization is a process on how we manage risk, right? Product are basically loans to SMEs.
Right.
There are loans to SMEs, but the loans are kind of always structured in a way that they're not sitting on our balance sheet. They are sitting, the credit risk sits with a fund or a bank, which wants exposure to that risk.
True.
Right. So that allows us to create very different profiles of credit risks for different players in the market. But from a business perspective, they don't care, right? Who is the lender at the end? As far as they're concerned, they're dealing with us at all times. We are managing the whole process. But because then we go out and we have separate structures with different lenders in the market, and SME coming to us is pretty much same as applying to 4, 5, 8 different lenders, right? So the probability of us being able to meet that requirement is 8 times higher than anyone else. Not exactly 8 times, but you can understand, significantly higher than anyone else. And as we keep building that suite, different risk profiles with different lenders on, the probability of the SME application being successful exponentially increases.
Makes sense.
Right. So that's really how the structure works. You've got different people taking the risk that they are comfortable with. So nobody's actually being sold a piece of a loan which doesn't meet their risk criteria.
Makes sense.
But you just have multiple of them, all with different risk criteria, different return expectations, which is how the loans are getting priced in.
Right.
From a business perspective, super simple process, one application, but with a much higher probability of a positive outcome.
Makes sense.
And that's how we are looking at India as well. A lot of the funds we work with, we've had long relationships with. They are open for Indian exposure. The challenge for them is how do we structure it?
And these are what kind of funds would these be?
Credit funds.
You've got global India credit funds, based out of UK as of now?
Based out of there. Some of them have presence in India also, but a lot of them don't have presence in India because the biggest challenge they have is the scale. Right? If you're a $20 billion credit fund sitting out of New York, and you think, okay, in India, can I actually deploy 100, 200 million quickly and sustainably? I think that is the challenge a lot of them are not able to get their heads around.
Got it.
And that is especially, and so, I mean, there are very few NBFCs which are hitting that kind of scale on a regular basis and retaining that level of scale, right? So that is the challenge, and that is what we are trying to bridge, and that is what we are trying to make up for and said, guys, we already have relationships. They have worked with us. They know how we operate. We have delivered what we have always said. We are presenting a compelling case to the same guys, saying, guys, we will give you enough volume. And this is the risk profile. You have traded with us. You know how risk is managed. This is India. We have accounted for that. And again, a lot of the things we are doing in India, we are also doing it with acquisitions. It's not a pure start from zero for us. So we are looking at track record. Everything is in place.
Makes sense. So if you look at, and maybe this is a very stupid question, but if you look at these funds right now, I mean, not talking about those specific funds, but I'm talking about foreign funds. If they want to kind of come to India and invest in these segments, the the traditional route that as of now they would probably do is set up an NBFC or kind of fill up, probably be a capital partner for some of the NBFCs. For example, Saison Capital is one of them, right? The Credit Saison is one of such NBFCs. So how do you see, let's say, advantages of that kind of a setup versus a setup that you are building up?
Again, many credit funds don't want to start an NBFC. That is
True.
not the business they are in, right? That business is different.
Mm-hmm.
So a lot of them don't want to do that. And a lot of the people, they are able to kind of get exposure to India, but via the ECB route. ECB by nature is restricted.
Mm-hmm.
The kind of returns you can charge, the terms you have to commit to.
Right.
So all of that makes it less attractive and more challenging for the funds to get their head around or hit their return threshold. Mm-hmm. Whereas proper securitization structures, I mean, securitization in India is still in its infancy, right? I mean, you're increasingly seeing it becoming more and more part of conversations, but significant securitization, especially related to SME lending, there aren't really.
I think on-ground presence is zero. You're right.
Yeah. So, I mean, again, are structures there to be able to do that? Absolutely, yes. Are the structures challenging with all the regulations, bells and whistles with it? Yes, they are. Right? Is it doable? Yes. Is there capital which wants access to it? Yes. The first three parts, everybody working with a Big Four in India is going to figure out. The fourth part is what we have figured out.
Okay.
So combining that together will allow us to bring different type of capital to the SMEs in India. I mean, again, from an SME perspective, they're dealing with us. They don't care, right? I mean, they are dealing with us, but in the background, that will help us fulfill more requirements.
Makes sense. If we were to kind of break this down a bit, right, and humor me here, how would we kind of look at this entire piece working? Let's look at it first from an MSME perspective on how or who will be getting that loan from, and then how does that loan get grouped up and boxed up in a box of securities that kind of goes to the fund, to put it very simply. I mean,
again, I'm very layman, so I might get some of the technicalities missed out in the conversation now. But very simply, they are always getting a loan from an NBFC. Right? The NBFC, depending on the type of loans and stuff, might need to hold it on the balance sheet for a bit or not. At that point of time, they sell the loans to a securitization vehicle. Right? The securitization vehicle is funded by issuance of securitization paper to FPIs.
Right.
The FPIs can buy that paper, which basically gives them the risk to that credit pool, which sits within the securitization vehicle. So the NBFC is the counterparty for the SME. The SME doesn't know anything else in the background, doesn't care about anything else in the back. It's no different from them having borrowed from a bank, right? An NBFC. Right. It's just the form of capital is different. What the capital allows you to do is different.
Makes sense. So in this case, if we were to look at Pulse's role, where all would be the inflection or intervention points?
So, I mean, so today, if you want to underwrite a business, you require data.
Right.
All of it sits on the Pulse platform. Right. In India, of course, as I said, the data is different. The way we treat data, the way we get data, the way we store data, how long we store data for keeps changing as per the local regulations. But again, the data sits with us. The decisioning engines are ours. And all the origination heavy lifting is done by the Pulse platform. It's reliance on platform. We always say, right, securitization works on objectivity, not subjectivity.
Understood.
Right data makes it possible.
Got it. So one major point is essentially where the data originates, which is essentially the ground level at MSMEs or the SMEs, right? The second inflection point could also be wherein you are partnering with an NBFC to kind of make the loan available to them or to make possible the discovery in that case. Would there also be an intervention point in terms of getting a fund associated here to be ready to work with the NBFC to kind of take it off their book?
Yes. Finance part. So we are involved end to end, right? We are also working at the sourcing and in funding the SMEs.
Right.
Today, I mean, it's not. So, I mean, as far as we are concerned, for us, when we think about lending or when we think about any industry, we are involved throughout the chain. Right. How we make economics work is by being part of the whole chain. No part of the chain gets stressed by us being involved, but all of them benefit.
Fair.
And all of them contribute a little to our margins.
Makes sense. Interesting. Just to digress a little bit over here, I'm looking at this. You spoke about the papers that are then bought by, I forgot the term that you used, but the papers that are bought by someone else to kind
Foreign
of
investors.
Yeah, foreign investors or FIs, right? FKIs, yeah. So in this case, in let's say past couple of years, there has, I would say past 3-4 years actually, there has been a trend in India of investing in alternate investment classes, wherein you kind of open up different avenues to retail investors. How would you look? And I mean, and over there, you do see a lot of people investing in bonds, so as to say, of some of these NBFCs, in terms of A-rated, AAA rated, B-rated NBFCs, and kind of investing with returns ranging from, let's say, 8% to 15%, as high as 15% in many cases. So, how would you kind of look at that opportunity in terms of creating those kind of investment assets for retail classes, the ones that you are essentially also been able to create for the FIs over here?
I mean, the short answer is they can get access to it via funds. Right? Directly at the retail level, I don't think regulation is anywhere even close to making it possible. I mean, this is not a question whether we can structure it or not. But regulation is not there to allow us to do it.
Makes sense.
If the regulatory environment changes, and if that, and again, I don't, even in the West, it's pretty difficult to kind of, for an individual investor to get their head around the securitization concept and clearly understand the risk they are buying is not easy.
True.
So from a regulatory aspect as well, that is an area I'll be very surprised if it changes and suddenly the market is able to do it. I don't think there will be enough protection in the current form, at least, for retail to be directly participating in this.
Fair enough. No, I think that's a fair statement. But one does tend to ponder on these kind of possibilities, specifically the alternate investment classes that are kind of that picked up trend recently. I think now it's slowed down a bit for some reason, but yeah. Anyways, having said that, something that really kind of also piques my interest here in this scenario is, how do you look at indigenous platforms like TredX, which are also those invoice kind of for lack of better word, tokenization, so as to say, or kind of at least making the invoices digital and creating a marketplace for lenders. How do you see them, and do you see an opportunity there for you to also integrate and work closely with them?
Not enough friction. I mean, that market is really low cost funding. Majority of it should be done by banks. I mean, there is very little friction in that market. TredX is a fantastic platform. You have seen the recent regulatory changes where they are again making securitization the core theme around the platform, which will again get capital moving a lot quicker. So it's not, and that's why I said, from an India perspective, it's not securitization is becoming more and more part of conversation everywhere. A lot of NBFCs are already trying to get access via securitizations. Many are structuring because at the end of the day, it's about the end investor who buy the paper, right?
Fair enough.
What level of comfort you can get there. So, but it is. I think over the next 2 to 3 years, I'll be surprised if we don't see a large number of securitizations out there in the market.
Fair enough. I think one last question for today. I think we've already about to overshoot our time. One last question in terms of how do you look at, let's say, second and third order effects in scenario where, let's say, 30% of MSMEs, and I know it's a stretch. Let's say 30% of MSMEs kind of get access to the kind of platform that you have built in any form, wherein the data is now easily consumable. Insights are available for lenders, and they become actually lendable, right? How do you see second and third order? The first order effect is obvious, but how do you see the second and third order effects coming out?
You will see a massive impact on GDP instantly, right? It's not just about the business growing. When and also you will see the take up very significantly. Because when
True.
at that scale you have penetrated the market, everybody will realize not being part of it doesn't work.
True.
Right? So then everybody is on it. We are in an industry where I always say, right, there is a race to be second.
Right.
When you even start a business, getting your first customer is the biggest challenge. Especially if you get a large customer, then everyone else is looking at you and saying, what did I miss out on? That is the same. So I mean, from a market penetration perspective, if you get to those levels, then pretty much everyone else wants to be part of it. The GDP impact on the country. I mean, if you look at India, really, it's capital starved, right? The whole sector is capital starved.
Yeah.
If you can fix the capital problem at that level, I mean, you're looking at a real growth engine and a very sustainable growth engine at that, right?
Fair.
So it's like I always feel if the next thing that India needs to unplug is the access to capital. Not at the large corporate level. That is largely done, right? I mean, that is all sorted.
Yeah.
It's how can that be at the SME, MSME level?
True.
And how can that drive the growth at that level? That is what the real engine for any economy is. Can you get those entities running?
Makes sense. And this kind of keeps bringing me back to securitization, because that kind of will also add depth to the market in terms of capital. If you're taking off some existing risk of the books of NBFCs, they essentially get a fresh influx of capital that they can invest without being overly cautious or starved, because one part of risk is already off of their books.
You will see other way as well, where people will think that's the risk I wanted. My bigger aim is that, hey, if people see at the end of the day, risk is, in a lot of institutions, risk is not forward looking, right? Risk tends to be backward looking.
Right.
What worked? What worked? Can we do more of it? What didn't work? Can we do less of it?
Right.
If you get securitization, alternative capital, and you can suddenly make an untouchable segment of businesses seem very viable and profitable as a lending, you would hope that more and more capital starts flowing into those spaces, right? I mean, financial sector is that you don't see gaps for a very long period of time because the market notices very quickly.
True.
So I think if anything, that should increase the availability even from the banks and everyone, because suddenly now you have a use case. Again, as I said, it's a race to be second. Someone's established real viability of that segment on the lending side. Everybody wants it then.
Exactly. Yeah. Fair enough. No, I think this was really insightful, and Chirag, thank you so much for being with us and sharing your insights, especially on a Saturday afternoon. Thanks so much for that. I do have a lot more questions, but I think we are about to run our course. I definitely keep bugging you or WhatsApp to ask anything more if I come across it. But thank you so much for your time today.
Thank you for having me, and it was really good conversation. Likewise. So you pushed on a lot of topics, and it was very engaging.
Thank you so much. Thank you.